A survey was conducted and the question was, what makes you make losses in forex market? I'm sure that a lot of traders, especially those who know how to analyze, those who know what they're doing, I'm sure that most of them will tell you that fake breakouts is one of the things that make them lose money in the forex market. And that's why I've decided to do this YouTube video to tell and teach people how to mitigate fake breakouts. This video is very important, and I highly recommend and advise that you watch this video to the end because of the great impact value that are in it. Yeah. This topic is extremely important because it borders on a lot of things. Fake breakout in forex market. Now look at this market now. First of all, the question is my trend line correct? Look at my day one. Is my trend line correct? I connected this. Now, most people who normally trade using price action and technical analysis, once there's a breakout here, they'll say, there's a breakout. Then they wait for a retest. And what happens after the retest? They sell down. Breakout retest, you sell. But then what happens? The market came in back inside and started buying. So this is fake breakout. And by the time the market would have retested here, many people would have sold the market here, thinking that the market will start selling down because probably they thought that there's now a change of trend. But then they would have lost their money because the market started buying. That's what this YouTube video is about today. Today we'll be talking about fake breakouts. How not to fall prey to fake breakouts. When I start trading, once I see a fake breakout, I say, why is this happening? But now, if I see a fake breakout now in the forex market, I'll be excited to take it. I'll be very happy to take it because now I understand the principles. And that is what I'm about to give you, premium content. So let's go. Like I said, 3 ways for you to catch fake breakouts. The first one we're going to talk about is smaller time frame confirmations. Smaller time frame confirmations. What do I mean by smaller time frame confirmation? Remember, I told you I'm going to talk about 3 things. The first one, smaller time frame confirmations. What do I mean by smaller time frame confirmations? Now, normally, the normal way of trading the market is, if you want to analyze the market, you probably start from the higher time frame for you to see the overall trend of the market, to see how the market goes and all. And then after seeing the overall trend of the market, you go to lower time frames to pick entries. So the point I'm saying is, if you want to mitigate fake breakouts, to gain from fake breakouts, once you're done with your higher time frame and everything, you go to lower time frame to find confirmations. So let's use this trade example as an example. This particular trade now has a fake breakout, right? Do we agree that this particular trade has a fake breakout? Or I can even decide to use this trend line. Look at this trend line here. I can decide to use this trend line here. Let's use this trend line here. Let's leave this one for now. So now let's assume we have this trend line. I have drawn this market and I'm saying, okay, once this market gets here, it begins to sell. That's what I'm telling myself. It begins to sell. Once this market gets here, it begins to sell. And then look at that market. It got here, bought above. And most people would have thought, that's a breakout. But then it came back in and started selling back. Do you understand? He came back in and started selling back. So now, what do I mean by lower time frame confirmations? Lower time frame confirmations in the sense that I would not have sold my market here, no. I will go to my lower time frame. Let's finish drawing this trend line. This is very important. I know people who make losses from this a whole lot of times. So now this is what we have here. So what do I mean by lower time frame confirmations? I'll go to, remember, like if you used to watch my YouTube videos, I normally classify time frames. I say there's higher time frame, there's lower time frame. I normally say that 15 minutes, 5 minutes, M30, M15, M5, and M1 are lower time frames. So now we want to get a lower time frame confirmation. Now we'd have to draw this to get our lower time frame confirmations to see when the market has actually finished. Now, once you draw this, you see that there are lots of invalidations here. So what do? You take it down. Lots of invalidations. This is us trying to get our lower time frame confirmations. And now we have it here. Look at this D1. So I would not have sold this market until the market broke out of this area. So that sell is not done until it breaks out of this trend line. So if you do it like that, listen, look at the gain that you'd get. You wouldn't have fallen prey to these fake breakouts here. You would have entered the market here at sniper and then sold the market all the way down. Lower time frame confirmation. So if you want to mitigate against fake breakouts, number one thing you should do is whenever you're done analyzing from your higher time frame, go to your lower time frame to find an entry. Don't just see what you see from the higher time frame. In H4, one candlestick forms in 4 hours. In D1, one candlestick forms in 1 day. You know what that means? A whole one candlestick will form in 1 day. So before a whole lot of things must have formed in 1 day, 24 hours must have passed. A lot of things must have happened in the market. So please, you want to mitigate against fake breakouts. Number one, smaller time frame confirmations. Always find your smaller time frame confirmations. Very, very important. So what is another way? Now, the second one is breakout and retest to support all resistant areas. Very, very important. Breakout and retest to support all resistant areas. Most of the times, once they say breakout, ask yourself, is that breakout to a support or resistant area? Remember, breakouts and retests. There's a breakout and there's a retest. So if the breakout is to a support or resistant area, it's not a breakout yet. Again, let's use this same market as an example. Let's use the same market as an example where we got a fake breakout, right? I think we all agree that there was a fake breakout there, right? Here. So now, assuming now that, okay, we are in this particular point of the market, and then the market bought above here. The market bought above here. And then I say, okay, now this is a breakout. Once it gets here, I should start buying. No. Very, very wrong. What do? You first of all check. Now, this was the last high of the market. This was the last high of the market. So if that breakout here, that breakout couldn't break over the last high of the market, that's to tell you there's something fishy going on. That's to tell you that breakout is not a real breakout. In fact, there's this strategy I use with the mentorship students that I do. Once something like this happens, there's something we do. We just take it off in such a way that it accommodates us. But now let's just focus on this. Breakouts and retest to support all resistance area. So if that market was here, because it didn't break over the next high, it's not a breakout yet. In fact, some people might even consider this as a double top. Yes, of course, people can. So you need to ask yourself, the place the breakout happened, is it the right place for a breakout to happen? Is it at a support area? Is it at a resistant area? If it is, then the market is forming something else. In fact, there are some times, let me tell you something. There was a time, I think about last week in Deriv, indices, market started forming retests to support levels. Most traders often think that every retest is going to be to a trend line. No. Retests sometimes can be to support all resistant levels. I've seen it a lot in the market. See, I've been trading for more than 5 years now. So when I tell you something, I'm very, very truthful with what I'm saying. And not just trading for more than 5 years, I've been profitable, consistently profitable for more than 4 years, or at most 4 years. So I know what I'm saying. I'm telling you, I'm telling you this from the eyes of an experienced trader. See, let me tell you, some traders don't trade. Some traders don't trade. All they do is show their lifestyle and all. Me, I trade. I trade almost every day, I trade almost every week. So I see the market, I know what is going to happen. No. You understand? So I'm telling you this out of a convicted spirit, out of, an experienced body. Sometimes market retests to support all resistant areas. So what makes you think that the market cannot break out to support all resistant areas? So whenever you see a breakout that is at a support or resistant area, do not take it wholesomely as a breakout. Like this now, it didn't break off that previous high. So that should tell you, it's not a breakout there. Don't wait for a retest there yet. No. Don't. Now, before we talk about the third one, I have to really tell you about the Forex Fund. You can see I'm more of because this is an amazing prop firm that helps people trade the markets. They provide capital for you by passing out just very few evaluations. You can be able to enter the market and make huge money from it. And this is not like the scamming part whereby once you're done with your profit, they refuse to pay you. No, they don't do that. They really pay you and make sure that you get the money once you're done with, the trading and all. And it's amazing how they do these things. And I don't know, they say follow who no road. So I have to bring it to you people because I know road. I'm telling you to do it. So if you want to trade the Forex market, you don't have capital, I highly recommend you go use the Forex Fund right now. Create an account. I'm going to drop the link in the description. Create an account and trade with them. Open an account with them. Do the evaluations and make huge profits. Very, very important. Yeah. Now, the last one we're going to talk about today is trading against the trend. Once you are trading against the trend, there's high possibility that you are going to meet a fake breakout. Your higher time frame is telling you to buy. Your lower time frame is telling you to sell. You go and choose what the lower time frame is telling you. And then you tell me, okay, there's a fake breakout. Oh, no. If you really want to make a trade, always follow the trend of the market. Always. Don't trade against the trend. There's a breakout and retest in the lower time frame, but in the higher time frame, nothing has been confirmed. You now decide to go and take the market. That's stupidity. And I don't know. Yeah, I know that losses are part of trading, but there's this thing I normally tell people. If you are disciplined enough in the Forex market, you know what you're doing. You have a working strategy and you're disciplined. There are some of these small losses that shouldn't come by. You shouldn't even be making it at all because it makes no sense. Why should someone trade against the trend of the market? Why? Although sometimes it's good for some people, but then most of the times it will bring you into penury. So you want to mitigate against fake breakouts, do not trade against the trend of the market. Do not. There are lots of other ones, but I don't want to make this video long, so I'm going to stop here so that this video don't be longer, because most people don't watch YouTube videos that are more than 10-15 minutes. I don't know why. So I'm going to end here, and yeah, probably next week, because we drop videos every week. Next week, I'm going to drop another one on more things to help your trading. So you should subscribe. I don't know. This is Mick Derry. This is Mick Derry.